All right, it's officially 9 o'clock. It's Monday on a holiday week. So we're going to give it a few minutes for everyone to jump on. We're going to be discussing current interest rates, obviously, what's happening in the markets. And then also we're going to be talking about reverse mortgages. So I've got a special guest here, Sherry Schmitty, who is on my team as the team's reverse mortgage specialist. And she's really, that's all she really focuses on, and she does it really, really well. So we're going to go over that in just a second. And we've got everyone just hopping on here. So we're going to give it a few more moments as everyone logs in. And happy Turkey Week.
Hi, John.
Good morning, Tanya. How are you?
I'm well. It's been a bit, hasn't it?
Yes, it has.
My apologies. I've been working on our own house for 4.5 years. So
Oh my gosh, that's
finally,
quite the undertaking.
well, as everyone knows that's in this business, there seemed to be some sort of lack of product.
A few of them. Yeah.
Supply chain, over
I've
budget.
been trying to get somebody to trim my trees in Flagstaff for a year and a half. And every time we have somebody that schedules something, they just never show up. It's fantastic.
Oh, I've got tons of resources and relationships, so I'm your guy.
I'll have to talk to you about a tree trimmer and a
Yes.
new landscaper, because it's just been sad.
Yeah.
But
yeah, anything you need in the mountains, I'm your jam.
You got it. Sounds like a plan.
All right.
All right, so it's 9:02. It's 2 minutes after, so I'm going to go ahead and get started. And welcome, guys. It's a holiday week, so it's going to be a slow week as far as news goes, but always important. So I'm going to go ahead and share my screen, and we're going to jump right into kind of what interest rates are doing right now. But I want you guys to know that we've got a special guest on here, Sherry Schmitty. She is our team's reverse mortgage specialist. She is the actual one of only very few in the entire company that is a specialist in reverse mortgages. So she is going to give us the details of what we need to know and what's the exciting piece about how we can use reverse mortgages in our business. And that's coming up here this next year, because it's going to be a little slow towards the end of the year, but it's going to be a great tool. And I think Sherry's going to give you a lot of details on that. So I'm going to go ahead and share my screen here, and then we'll jump right into kind of what the markets are doing. So as you guys know, you've seen it all over the news. We had an increase in the markets and in the bond markets by a huge push about a week and a half ago. And the nice thing about that is we held. So if you see this, the Fibonacci level going across the top, we went above it, then we kind of corrected and had a little worse. Then we went to it, then we went above it, and then we corrected a little worse, but we're still in line. So we're holding those gains, and that's very, very important. One thing we want to be careful of too is watching the 10-year. This 50-day moving average, we're just on the heels of, we're staying underneath it. So we went below it, and we're staying there. We tested it a few times. We tried to bounce through it, but we're below it still. So that is a really good sign. If we can go through that next Fibonacci level, we're going to see continued gains. And obviously, as inflation numbers come out, it's going to be important for interest rates. As inflation goes down, so do mortgage rates. So super excited on that. And as far as where interest rates are today, they're somewhat unchanged. The average right now, when I say average 30-year fixed, the average locked loan right now, depending on, there could be points or not points, but this is just the average overall, 6.63 on a 30-year fixed. Now, if you've got a 640 credit score, you're not going to get this rate. Obviously, it's going to be a little bit higher because you have more risk involved. But this is the creme de la creme, 25% down, 740 credit score model that they use for these averages. But sixes, no fives really in the forecast. You can always buy it down. Remember, the 2-1 buy down and permanent buy downs are very, very popular. So so keep in mind as we are moving through this holiday season that rates are still high, and buy downs work, and they really do help the psychology of the borrower get into 2% or 3% below the initial rate. It is temporary, and you can refinance and get your money back that you would have in the savings that you would have had. You can get that money transferred to back to you if you refinance. So that's a win-win. So just want to make sure you guys remember that as well. So as far as what's coming out this week, as far as the overall news, there's not much happening. So we've got a couple different things. We've got jobless claims are coming out on Wednesday. So that could give us a little bit of a boost in rates downward, or I should say dropping rates downward, and a boost in the bonds. If they come up higher than expected, it is the holiday season, so a lot of people are hiring, so we're going to keep an eye on this. But really, that's all that's going on. We have a couple treasury auctions. That's where our feds are auctioning off treasury notes. If these go well, that helps the bond market. Rates could go down, but we're closed Thursday and Friday in the bond market, so we're going to all be getting chubby and eating a lot of food. So I'm going to go ahead and stop the sharing and jump right into our main presentation, which, yes, I do have a beard. That is me with a beard. But we have Sherry Schmitty on, and she is our team's reverse mortgage specialist. So I'm going to bring her in, and she's going to discuss everything mortgage related about reverse mortgages and how to use them in your business. So I'm going to go ahead and transfer it over to her. And let's see here. I'm going to remove my pin so people don't see me the whole time. And then it's going to be all you, Sherry. So go ahead, and I'm going to pin you now. Add pin. There you are, Sherry. And you are on mute. Sherry, you're on mute. Sorry, guys.
Is that better?
That's much better. Yes.
Yay!
So,
Good morning, everyone.
Yeah, so tell us all about
us.
everything reverse mortgages. Like, tell us about the basics and how we can use them.
I will. Okay, Sean's only given me 15 minutes, so I'm going to talk fast. But I always ask, what comes to mind when you hear reverse mortgages? And I hear the bank gets the property, right? That's not true. Bank takes title, not true. Bank shares equity, not true. Bank sells the property when a borrower dies, not true. So all of this is misinformation that's out there right now, okay? Anyone that tells you that a reverse mortgage is bad is simply misinformed. And we basically just need to educate them, because reverse mortgages have had a bad name for a while. And FHA, for that reason, now calls them home equity conversion mortgages, or HECMs. So that's what I'm going to refer reverse mortgages, because you say reverse mortgage in a room and I promise you're going to hear all the bad things, right? So what is a HECM, right? We all take out of our cash pockets every month to make our traditional mortgage payments, right? A HECM is just the opposite. So you keep the cash in your pocket and you use your equity. So it's your money, you're just taking it from a different pocket, right? And it gives you equity that you may otherwise not have access to, okay? If your property were free and clear, you'd still have to pay taxes, insurance, and HOA, and you'd have to maintain the home just like you would any other time, right? There is no escrow on the HECMs. You have to keep that in mind. They will receive that tax statement, you know, and the insurance statement every 6 months, and it can be a big chunk of money. So you want to make sure that you make them aware of that. Okay, who's actually eligible? Anytime you have a client that's 62 plus, you really just want to make them aware that this is an option, okay? You will definitely separate yourself from the competition by merely knowing this product is available, okay? It has to be a primary home, okay? U.S. citizen or permanent resident alien, and the HECMs are all non-recourse. So in the event, which it would be rare, based on the factors and different things, that the home was worth less than what they owed, they do have the option of returning it to the bank, but it's non-recourse to them or their heirs. So nobody would owe any extra money. Okay. My big thing on these are the line of credit. And this is not going to make sense because the line of credit will continue to grow regardless of the home's value. And I know that doesn't make any sense, but it's not tied to the value of the home. And the line of credit can never be closed. So unlike what happened in 2008, when the lenders were closing the lines of credit, and then again during COVID, we all have credit lines in the event we have an emergency, right? You want to keep those that access to that needed cash open and available. And those lines of credit will never be closed until both borrowers have passed. So again, the lines of credit that we're all used to that are open for 10 years and then they recast, you have to go get a new one, reapply, get a new appraisal. This is one and done. They will have this line of credit open and available to them till the day they die. Okay. Who's it for? Okay. Borrowers who don't want a mortgage payment, right? We all have the goal of paying off our mortgage before we retire, but is it really necessarily paying off the mortgage or not having that mortgage payment? So everyone's like, they want to retire, no mortgage payment. That's what the HECM is all about. You are not going to have a required mortgage payment. There is an option, and I'll talk about that a little bit further when we get into the line of credit. But if you were to make a mortgage payment, say $1,000 a month, you're opening up that line of credit, and it increases the line of credit availability dollar for dollar, right? So increasing borrowing power. I mean, I'm going to go into this example. If you have a 62-year-old buyer and wants to purchase a $600,000 home, they come in with just $428,000. Now, if they're older, a 75-year-old can purchase that same home for $375,000 too. So you can see, even if they have $600,000 in cash, why would they want to put all that money down? You want to really, hold on to that cash versus put it in something that you may not have access to.
So that's
So a lot of
purchasing the home,
financial.
Sherry. So that's
Say that
purchasing a
again?
home. That's purchasing a home with a reverse mortgage and never having a payment again.
Absolutely. Yes. Purchasing a home. And a lot of people aren't aware that you can purchase a home. And do you have a flyer that you can put up, or you want to wait for that?
I do. I'll wait for that. Just actually, I can
Okay.
do that now. Let me just share.
It just shows different ages and different sales prices and the borrowing power that you have that you can show to your buyers.
Let me show you this right now. So here is a little flyer. If I can get my computer so I can move things around properly. Don't send. Oh my gosh, I hate Zoom and I love Zoom at the same time. Can you see that little PDF? Zoom just kicked me off, guys, so I apologize.
I hear you now.
Yeah, Zoom kicked me off. I had to re-log on. So I love Zoom and hate
Well,
Zoom.
we can share that later if we're having trouble with that.
Let's try that. How is that? Can you see it now?
Yep, maybe just scroll. Yeah, there we go.
There you go.
All right, perfect. So there you have it. So this shows the home purchase price, the age, and how much you need to bring in. Is that correct?
Correct. And that includes that's total coming to the table at closing. That includes all their closing costs, everything.
So this would be good for somebody that maybe wants to pay cash. They're retired. They don't want a mortgage payment. They want to pay cash. And instead of using all of their money that they have in their accounts, they can put less than that down, still have that nest egg in the account that's accruing, and put a smaller portion down, still not have a mortgage payment, but still have extra money as a cushion in their accounts that's growing.
Exactly. And we are seeing a lot of silver divorces right now where you have two parties and they might have a $700,000 home free and clear, but when they split that equity and they both walk with half, it's going to be difficult for them to purchase something with cash. So by using that HECM, you can see how much more purchasing power they have.
Got it. So let's say $600,000, they're 70. They can put 50% down instead of all cash and have a home equity line of or home equity credit home equity conversion mortgage. There
Conversion
you go.
mortgage.
And
Yeah.
And do $392,000 and never have a mortgage payment for the rest of the life. But I want
Correct.
to reiterate the fact that you still need to pay your taxes and your insurance on the property separately and any HOA.
Correct. And that's no difference than if the home were free and clear, right? I think the biggest concern is people, they get that those are big chunks, right? 6 months taxes or a 1-year insurance policy. And so I just tell people, if it's $300 a month, put $300 in a savings account. So when those come due, you kind of create your own little escrow, basically.
Yeah. So the old adage of I wish I could pay my house off for retirement doesn't need to be true.
Nope,
If you want to get rid of your payments, you can do it this way as well.
correct.
I love it. Well, I'm going to make sure
Yeah.
everyone gets this little flyer that has this down payment, so you guys can keep this in your quiver of documents that you have when you're meeting with buyers and sellers. So I'm going to go ahead and unshare this and go back to you.
Okay. So like we said, even if they had that 600,000, why would they want to put it all into the house, right? Because as they get older, they're going to be on fixed income. A lot of people will come to us and say, we can't qualify for a second mortgage, or we can't qualify for a mortgage. If you have that too, we don't necessarily qualify in the true sense of ratio and FICO. We do more of a financial assessment. So I'll be honest with you, I've never had one that we couldn't get qualified, even if they're on Social Security. So it's basically, they have to be able to pay taxes, insurance, HOA, any other outstanding debts. But a lot of the certified financial planners are using this. It's not just needs-based. I mean, they're using it to strategically plan for retirement. So it's being used multiple ways, and it's huge. When a spouse dies and the other person wants to move closer to family or purchase a single-story home, or maybe they want to stay in the home, but they're going to lose a chunk of income. And a lot of people don't think about that. They will lose a Social Security, one or the other, whichever's the lowest. You hear Aunt Mary has to sell the house because Uncle Frank died. It's not necessarily true anymore if they consider that HECM. So benefits to the agents, your knowledge of this product in itself will separate you from your competition. The mere fact that you can say, hey, 62, have you heard about the home equity conversion mortgages? And you don't have to know everything about it, just know enough to get them to us to help them and to educate them. They need to be educated is what needs to happen. It'll increase your listings, definitely increases your buyers' purchasing power. The HECMs can provide cash to purchase a second home or investment property, right? They have to live in the primary home that we put the HECM on, but whatever they can use that money for whatever they want. So they
you can pull cash out from your home using a home equity
from the line of
conversion
credit,
mortgage.
from the line of credit. Absolutely. And that line of credit will continue to grow. Again, a little something that'll be confusing, but let's say, for example, the rate's 4.5. The line of credit will grow 0.5% above the current rate. So say 5%, say you've got a $200,000 line of credit, that line of credit will grow $10,000 every year. So in 10 years, you have a $300,000 line of credit. So you see where I'm going with that? If you get this mortgage when you're 62, continue making payments, you can build this line of credit. And then when one borrower dies, you can discontinue the payments. Or you can make them. You've got so much flexibility with this loan. It's just, to me, building that line of credit until there's an event that takes place where they need that extra cash. Maybe they stop making the payments at that time, right?
Yeah.
So I said financial assessment. It's not a true traditional qualification like we're used to. And this is a big thing. Seniors are giving legacy gifts to their children and grandchildren while they're alive. Who doesn't want to see their kids or grandkids purchase a home of their own? Give them a 20% down payment. Again, there's no payments to you. You're giving that legacy payment, and you can see it. You can give it to them and see the enjoyment that they have versus leaving it to when you pass.
So let's unpack that real quick, Sherry. Are you saying that you can actually take money out of your home as a retiree and give that to one of your grandkids for a down payment and still not have any payments on that? Is that what you're saying?
That's exactly it.
So the equity that they would have inherited, you could give that to them prior to that, still have no payments, and then say, here, guys, I want you to have this as a gift.
Mm-hmm.
I've never heard of that.
Absolutely.
I don't know if any of
It's
you have
huge.
heard of that, but I'm
That's
telling
huge.
you, if your sellers have the option of doing something like that instead of selling and moving into a retirement or whatever it may be, because they want to give that equity out to their family, that's pretty big. That's really cool. So thank you.
And another benefit to the agent, again, you don't have to be working with a 62 plus clientele, because we all have people, they just don't have enough for the down payment. Or, I mean, if they give them a 20% down payment, look at the money they're saving on PMI. It's huge.
Yeah.
And these are FHA loans. and they can go up to 970,800. We do have proprietary loans that can go up to 8 million. So again, it's not a needs-based. Everyone thinks it's a desperate situation. It's not.
So there's a
The
question
certified
here.
financial,
There's a question here, Sherry. How do you sell
Sure.
your home prior to you passing, prior to your death while holding a HECM? Is it a normal transaction like any other sale? Is that, I think that's
oh,
what they're,
absolutely. So people get confused thinking the bank takes title or, you know, there's something really special about it. There's going to be a balance on that loan, just like your forward mortgage, right? Your forward mortgage changes every day because you've got interest accruing until your next payment. It's no different with the HECM. There's a balance on there. You get a monthly statement showing the balance. It's really no different. You pay it
So-
off just like you would any other loan.
so let's just say I have a $400,000 balance on my home equity conversion mortgage and my house is worth 600,000 and I get, tomorrow I pass, there's 200,000 equity. A
Yep.
listing agent or a real estate agent would come in here, they would list the home for sale, they would get the payoff, and then they would walk away with $200,000. That $200,000 is that borrower's money. Sorry,
Correct.
the person that owned the home's money.
The heirs.
That would then be
Right.
distributed to their will or wherever it would go.
Absolutely. Here's another thing I wasn't going to mention. Again, we could talk about this all day long. But when you pay, okay, so somebody passes and you have a traditional mortgage, say it's $2,500 payment and the kids have no money. And maybe, Social Security stops, your pension stops. If the borrower had no real assets, who's going to make that payment? And I hate to say it, the bank doesn't care. If you don't make a payment for 4 months, they will put that home in foreclosure. Here's the beauty of the HECM. You have 6 months to put that property on the market. It gives you time to grieve. It gives you time to clean things up, go through things. You know what I mean? You need 6 months. And they will even allow another 2 90-day extensions. So, and again, on the HECM, you're not making a payment. So no one has to worry about where that money is coming from. And that's huge to me because again, that's a myth out there where they're going to sell the property, they're going to take it and you're going to get nothing. You will get whatever equity is left in that property and you have
Yeah.
time to put it on the market.
And here's a question that we have. You get the benefit of equity growth. What does the mortgage lender get? So the mortgage lender, the person that's holding the lien, they still get paid through the equity.
They're getting interest. Okay. Just like you. Okay. Here's the difference. A traditional mortgage has interest, right? You make that cash payment every month. You pay a little principal, interest, and your taxes and all that, right? So the bank is getting interest. That's why you're using your equity, but the balance of the loan continues to increase versus you paying cash every month with the balance decreasing.
So the wallet that you're taking it out of to make those payments is your equity instead of your bank account
Correct.
and checking account. So there's
Great analogy. Yes.
it's a different
Yes.
wallet.
You call it walls, I call it pockets. They're all your pockets. It's cash pocket, equity pocket, but your wallet. Yes, absolutely. So a lot of people, some people might need that. A lot of other people are like, we're going to use that. I mean, these certified financial planners are using HECMs for asset preservation, right? They're using it for their mass affluent investors that have 500,000 to 2 million. And it's not needs-based. I mean, they're using this as a tool to strategically plan for retirement.
And I was thinking if I was an older, well, I have a parent right now, they're almost 80. Their home is free and clear.
Mhm.
They don't have a ton of income. They're on pensions.
Right?
They could take some money out of that, use that to have a thriving final chapter of their life and still
Right.
not have any payments on it and let
Right.
them enjoy their end of life a lot more than
Mhm.
if they were strapped and couldn't do anything.
You can use it for medical, you can use it for travel, you can use it to make these legacy payments to your grandchildren. I mean, the uses, it's unlimited. You do whatever you want with the money. You will never be removed from the home. Both borrowers have to pass, so everyone, you hear, everyone where they think one borrower passes and they think they have to leave the home because some of them can't afford it, right? So there is that case. But a lot of them just, some want to move up, some want to move closer to kids, others want to move further from kids, it just depends. They're all different, maybe they have a 2-story and they want a single story, or there's so many memories at the home, they don't want to leave, right? They really want to stay there.
Yeah, that's my parents. They've been in the same home for 51 years.
And they don't want to
And
go anywhere.
They,
Right.
the world could fall apart around them and they will still stay in that house.
Right. And I have some of my agents call and say, I can't go through another down market, right? Can you do this for me? Of course.
Yeah.
I
So
mean,
let's
in-
touch base on this. Let's just say they had a home equity conversion mortgage in 2005 and there was a ridiculous amount of equity and then the markets crashed. That customer who had that reverse mortgage at the time, it doesn't affect them at all.
No. And it will, and again, that's the part that you can't really, it doesn't make sense, right? The growth of the line of credit is not based on value. We're going to do the appraisal once and it's done. And everything is going to be based on that, right? And so every year that line of credit will continue to grow.
So even if the house was worth 500,000 and their balance was $1 million,
Doesn't matter. At that
doesn't matter.
point,
There's still no
the
payment.
borrower has received more than what they had into the property. They didn't lose, right? And it is a non-recourse loan. So they cannot go, they at the end of it, if that's the scenario where the house is worth 500,000 and the loan's $1 million, of course you'd give it back. Thank you. Here it is. But the way these principal limit factors are, they're reduced to the point where you get 40 to 60%. They know that things are going to build, but they also know that that home is going to appreciate 3 to 4% annually, right? On average. One point you made, everyone thinks that your home has to be free and clear. It doesn't. Okay. So let's say you've got $150,000 mortgage on it. We're going to pay that off, right? So you're going to start with $150,000 on your HECM and it'll go from there.
I love it. Well, what I wanted to make sure is, I wanted to make sure you knew that Sherry was an absolute phenomenal expert genius at reverse mortgages. And
Thanks,
to let
Sean.
you guys know that at your fingertips, we have one of the best reverse mortgage people in the planet right here at your fingertips on our team. So I want to just make a quick point here and know that if you guys, and I get these calls quite often, if you ever run into a part where there's people that they need to sell because they just can't afford it anymore, it is an option for them to do a reverse mortgage instead, or buy with a reverse mortgage. Because there's some people that right now, I have an example of one right now where the home is too big for them. They're retired, but all they have is money in the bank. They don't have a pension. So they were self-employed. They have some money in the bank. It's not a lot. They want to downsize. So selling the house, doing a reverse mortgage on a new purchase, keeping that money and creating a revenue flow is going to be a tool for them. So I want you guys just to be aware of what we can do on the mortgage side for somebody that is in somewhat of a predicament in the retirement age of their life. Because there are some really, really great ways of using it. And all I remember seeing is, the actors, the older actors like the Tom Sellecks and coming out and talking about reverse mortgages, but nobody knew kind of what the details were and how to use it from a professional standpoint. So I want to make sure you guys know, and I want to make sure you guys understand that you have a direct line to Sherry. We're going to send her information out. Can you actually type it in the chat? Click on the chat and type in your cell phone and your email address.
It's on that flyer too. If you do provide that flyer
I
to
will.
them.
I'll send it to everyone as well. But yeah, it's a neat tool, guys. We want to make sure we are experts at everything for our customers. There's a lot of things that you may still have questions on regarding reverse mortgages. So I want you to make sure that you can call Sherry at any time. She is literally an expert at reverse mortgages. So there's her cell, and take advantage of it. Take advantage of her knowledge and help build your tools that you can use in listing presentations, or when you hear certain things that pop up when you're talking to your sellers or buyers about just their life. Know that this is a tool and that we will also discuss this with customers as well. So yeah, very interesting. And if you need anything more, guys, we are always here for you. And so thank you, Sherry, for everything you do. And
Thank you, Sean.
Appreciate it. And she actually has a full-on presentation. If you really want to sit down with her one-on-one and learn to be an expert yourself, I urge you to reach out to Sherry and learn more about that. So I know we're at the 30-minute time. We want to keep this short. So thank you, Sherry. Thank you, everyone. I hope you all have a wonderful Thanksgiving. I'm going to go ahead and stay on afterwards. And Sherry, if you can just hold on just for a quick Q&A.
Sure.
Sometimes people like to stick around and wait for everyone to drop off before there's the questions that they're popping up. So here's one right here. I have a client who will qualify to purchase reverse mortgage on December 11th. Does she need to wait until December 11th before starting, or can she pre-qual now and not close until after December 11th?
So when you say she won't qualify till December 11th, I'm assuming she won't turn 62 until then. We can actually do them. We don't tell people this, but 61 and a half. If they're closer to that next birthday, they will use 62. So if she's within a few weeks, absolutely. We could get started right now.
Perfect. Perfect. So yes, Emily, we can go ahead and get started on that now. There's no better time to plan than before you're trying to make the plans.
Before you need it.
Yep, I will send you the flyer. And any other questions on what's happening with the markets, with rates? It's going to be a slow week. Case Shiller comes out next week. That's going to be the big next. What is your company name? It's Waterstone Mortgage. And what's your email, Sherry?
C. Chimity. Yeah. C. Chimity at Waterstone Mortgage. Or you want me, let me put it in.
Or you can also do Sherry at WoolenMortgageTeam.com too.
Yeah, let's do that one.
All right. I will make sure everyone has Sherry's information, and we're excited to help you guys on this, because this will be, as the boomer generation, my parents are getting into retirement, like deep into retirement. This is going to be, and guys, the equity positions that they have right now are very high. So this is going to be a great way to get them into a very comfortable position, because they're, unfortunately, not a lot of people plan their retirement properly. So this could be a great way to really help them be comfortable in their final chapter. So super excited to have you, Sherry. So thank you very much. Again, thank you guys. We'll be on here. We'll stay on here for a little while as we close this out. And if I don't speak with you in the near future, happy Thanksgiving, and we will be in touch.
Great. Happy Thanksgiving, guys. Thanks so much.
So Linda has a question. If no one else has a question, could you go over the equity growth again? How does the equity line grow?
So it's a line of credit. Let's assume someone has a $200,000 line of credit. Okay. And your rate's 4.5, just because I can do the numbers in my head. It's going to grow 1.5% above current rate. It is an adjustable rate. You have a 5% overall cap. Okay. But so with that said, the rate does change. So 1/2 of 1% above the current rate. So say 5%. If you have a $200,000 line of credit, that line of credit grows $10,000 every year. The line of credit calculation will grow every year. So over 10 years, that's another 100,000. If you haven't used any of it, you will have a $300,000 line of credit. And it just keeps going. That's why I think everyone over 62 should have this mortgage. It will be the last mortgage they'll really need, right? And it will.
So they could have this mortgage,
open it up,
and they could still make the payments, and that credit line will continue to grow. And then if they wanted to later on do a legacy payment, they could withdraw from that. Is that what you're saying?
Yes. So let's go back to the $200,000 example. The second year it's 210, but let's say that they continue to make $1,000 a month payments. That line of credit is actually 222, because you're going to have the extra 12,000 that you made in payments. It goes directly dollar for dollar added to that credit line.
I love it. Linda, I hope that answered your question.
It's huge. It's huge.
Now that line of credit, that's just the reverse mortgage at the beginning stages of its life. Is that what you're saying? That's not
line of credit goes. Yeah, no, it's part of the reverse mortgage, the HECM, but it is open for the remainder of your life. It will never be closed. Even if the market tanks, it is not tied to value. They can never close that.
And we all know the market is not going to tank because we have a housing shortage, which is what Case Schiller is going to be talking about next week. So very cool.
Yeah, I don't see the market tanking. I see property values just continuing to grow. You know, a lot of people as they get older, they don't have access to that equity. They have a home free and clear, no money in the bank, but they can't afford to make any payments.
And you can still get
This is a game
qualified for this without any income. Is that correct? Depending on your age?
No, you have to have income to
You
be
do?
able to pass the financial assessment.
Okay, got it. So you need to be able to make obviously the payments on your taxes, insurance, and like have the recurring income for the rest of your life. Yeah, that would make sense.
And there's a small residual to make sure they can buy groceries and pay utilities.
Got it.
Yeah.
I love it. Well, Sherry, you've been a wealth of information, so thank you. And again, if
Thank you.
guys- Amy and Linda, if you guys need further information on this, she's a phone call or an email away.
Yeah, if you need a specific scenario, I can run through an illustration with you and show you all the numbers.
I love it. All right, guys. Well, Mike, it looks like you just joined us, but I'll send this recording out to everybody, so everyone will have a copy of the reverse mortgage talks. And Sherry, again, thank you and have a phenomenal day.
Thanks, Sean. You too.